Okay.
Hi, my name is Haleigh Sharp, and this is my financial analysis for my MBA class, my MBA Finance. I chose 3 different industries. The 3 industries I chose were restaurant enterprises that own chains, I chose real estate, and I chose cell carriers. So, let's get started. Okay, so here are my industries and my companies that I had for each industry. For my cell providers, I used AT&T, Verizon, Sprint, T-Mobile, and United States Cellular. For my food enterprise industry, I used Brinker International, Yum Brands, Restaurant Brands International, Darden Restaurants, and Dunkin' Brands. For my real estate, I used Colliers International, CoStar, HFF, Jones Lang, and Remax. All right, and so let's get started with my real estate industry. Okay, this is just a breakdown of on Bloomberg of what each company does. Basically, they're all in the same line of work, but Colliers International Group, it operates globally, a real estate services sector. They provide a variety of services in commercial real estate and residential property management. Next, we have CoStar Group. They provide building-specific information to the United States commercial real estate industry, and the different related industries that go along with real estate. Next, we have HFF, and they provide a commercial group. They provide commercial real estate and capital market services for the real estate industry. Next, we have Jones Lang, which is they provide real estate and investment industries. Information for that industry. And lastly, in this industry, we have Remax, which they provide real estate and brokerage services. The company sells residential and commercial properties worldwide. So they're probably one of our most well-known brands that we have here. Okay, this is the Bloomberg financial breakdown for the Colliers International Group. Here we are able to see, the different analysis, the different types of ratios that we went over in class. We're able to see that most of the cash flow is going, to equity here. That's where, most of our ROE is going. We're able to see a bunch of different things from this. So we're going to break that down in a little bit and compare them between the companies. Next, we have CoStar. Here as well, you can see that most of our cash flow goes to equity. Our next group is HFF. This is their financial breakdown on Bloomberg. We can get all the different, and this is where we pull all of our information from to do all of our ratios and comparisons. Next, we have Jones Lang LaSalle, and the same for them. Most of their cash flow goes to equity as well. And last but not least, we have Remax. Most of their cash flow is to equity. They have, this here's how I pulled all the different information for the ratios analysis. Okay, here's some of the ratios I chose to do. First, we'll look at the quick ratio. For our quick ratio, as you can see here, our CoStar really is leading the pack there on the quick ratio, and everybody else is really just kind of neck and neck on that one. Next, we have economic value added. On this one here, the HFF is by far the lowest. It's really struggling in this one here. So, but everybody else is, pretty leading the pack. First, JLL, they started out, first, that's Jones Lang. They started out really low, and then they picked back up. So anything can really happen in these over the years. Next, we have our current ratio. CoStar International is really up in they're the orange. So they started off really low, but they have showed probably the most improvement over the years as they're now in second place. Next, we have Collier International, which has consistently led the pack. And in the bottom for the profit margin is JLL. Okay, this is the ROA on those different companies and how they compare to each other. As you can see here, HFF is in the lead for this one. Then next, the CoStar is at the bottom of this one. So it led most of our other profit, different ratios, and this one's in the bottom. So. Here's our ROE analysis here. I think probably the most improvement, if you can agree with me, is the Collier International. They started off super duper low, and then they got up to the medium, and now they're right there at the top, neck and neck with the HFF. So that's pretty beneficial there, pretty significant jump. CoStar here is at the bottom of this one pretty consistently. Here's just a quick look at our tax burden ratio between these. The HFF has a pretty high tax burden here, and CoStar is pretty low on the PE ratio. Everybody else is pretty, it's neck and neck. You know, they're on top of each other. One year one will be higher, one year the next one will be higher. So that's a pretty competitive industry. Okay, next we're gonna move on to our food enterprise industry. Like I mentioned earlier, all of these companies that I chose in this, they all own chains of restaurants, which I thought was really neat. So it's not just one restaurant, it's the owner of all. Okay, first we're gonna get started with Brinker International. Brinker International is an American multinational hospitality industry that owns restaurants like Chili's, Little Italy, all those chains, things like that. Okay, this is their breakdown on Bloomberg. This is how we were able to see, you know, where their cash flows were mostly going to liabilities. You know, we were able to break down ROE from here and compare this between the industries. Okay, next we have Yum Brands, which is an American food company, Fortune 500. And Fortune 500 corporation. They own brands like Taco Bell, KFC, Pizza Hut. This is their financial breakdown on Bloomberg. Okay, next we have our Restaurant Brands International. They own restaurant chains like Burger King and Popeyes, so a lot of the ones that we're familiar with around here. And this is their financial breakdown on Bloomberg. All right, next we have Darden Restaurants. They own things like Longhorn Steakhouse, Olive Garden, Capitol Grill, Cheddar's, things like that. So this is definitely my favorite group. I love all these restaurants here. So this is their financial breakdown. All right. Next is the Dunkin' brands. They own things like Dunkin' Donuts and Baskin Robbins. All right. And next we're going to look at their liquidity. This is the quick ratio that we chose to do throughout the industry. Here as you can see that the Restaurant Brands International, they really started off strong and now they're here towards the bottom, which is kind of surprising that they dropped so drastically. The other ones are pretty consistent at the bottom, except for Dunkin'. You know, Dunkin's a very popular brand here in the United States, so that one has stayed pretty consistent and we've had a recent jump here at the end. All right, next we have I decided to do our EBIT margin. We wanted to break down that. Here again, Dunkin' is really just leading the brand and having the highest EBIT margin. The restaurant Yum, they're pretty consistent as well. The Eat brands, they've been, you know, towards the bottom in there. So, you know, it's always, they're pretty similar in every industry that we've looked at so far, every restaurant that we've looked at, you know, it seems like they're pretty consistent, close. There's always one or two that are really significantly higher or lower than the other ones. But here, you know, Dunkin' and Darden and Restaurant Brands International, you know, things like that, they're all pretty close. So except here for the Dunkin' brand. All right, next I broke down our ROA and the profit margin. Here for the ROA, let's look at that first. Our Yum Brands is very high. Like Yum Brands has been pretty, you know, middle of the pack towards the lower end for the other ratios that we compared with. So it's kind of interesting to see them jump up so high in the ROA. Here, the Restaurant Brands International is by far the lowest on the ROA. And Bloomberg wasn't able to find some of the information for them, so that's why we're missing a year for them. Next, we go over here for the profit margin, and Brinker has really had a spike in the last couple of years, and Darden is pretty consistently low in the pack there. Okay, here's our ROE analysis for the industry. As you can see, once again, Bloomberg was not able to find some of this information, but we are able to see here that Brinker is very high. It started off Duncan is kind of in the middle of the pack here. They've been consistently really high in these, which is kind of surprising to see them go to the middle on ROE. And our Brinker brands, they're, you know, up here as well. But the Darden is really low in this one, which is surprising. Okay, here I just did a quick, we looked at the current ratio and the quick ratio of these. Brinker International was very high in the current ratio and also for the quick ratio. Okay, next we're looking at cell carriers. We're all very, very familiar with the cell carrier brands. I actually had a little bit of trouble finding 5 that were publicly owned. So I had to kind of switch around my, for my original ones that I had chosen to find some that were publicly owned. My first one I did was AT&T, which is probably the most popular, you know, one of the most popular in the United States that we use. And here's a breakdown on Bloomberg of their, you know, all of our findings that we had there, all the different ratios, current ratio, quick ratio, price to equity ratio. So that's all shown here. Okay, next we have Sprint, which most people would say is probably the most second popular in, kind of tied up with Verizon. So for second popular, but here is the breakdown of all their different ratios that I ran for them. We did the quick ratio, the cash ratio, current ratio. We're looking at their financial leverage. You know, it's easier, you know, for the, when we're looking at the leverage, you know, you want to have some leverage, but not too much for that, as we learned in class. Okay, next I did Verizon. Same thing here. I ran the same analysis for all of the, I did the same ratio for all of the companies in the industry. So we have the quick ratio, the current ratio, you know, so on and so forth. At the bottom, we're looking at equity, the equity margins, profit margins, things like that. So this is all shown here on our Bloomberg. Thank you, Bloomberg. Okay, our last one that we did was T-Mobile. T-Mobile has been kind of overlooked, I feel like, lately in the cell industry. So it's interesting to see how it compares to the other ones soon. We ran, once again, we ran the same ratios from Bloomberg on those. And last but not least, we have the U.S. Cellular Corp. This one is probably, I would say, the least common out of all the brands. To be honest, I did not even know that it was a thing, it existed until doing this project. So, you know, you learn something new every day. Okay, we're gonna look at our liquidity throughout. First, you know, we have the Sprint Mobile. Sprint and T-Mobile are probably down here at the bottom. And surprisingly, U.S. Cellular had a really high quick ratio, and it's pretty consistently being the highest. AT&T is kind of in the middle. Okay, and here we are again. As you can see here, AT&T is a little higher on this one for its EBIT margin. And the U.S. Cellular is back lower at the pack again. Here we can see that actually Sprint is leading the pack on the highest EBIT margin consistently throughout the years. U.S. Mobile, it seems to be the only one that's really having fluctuating years. Okay, next we ran the ROA. As you can see here, Sprint is struggling on the ROA section. They're by far the lowest of everybody else. Pretty much everybody else is like neck and neck. Verizon has a very high ROA compared to the group, but everybody else is so tightly knit, they kind of just alternate through years and who's doing the best and so on. Okay, next we have, I chose to look at our ROE. Verizon, again, is doing really, really high return on equity here. We weren't able to find all the information for Sprint, so that's why for their ROE, so they're a little. That's why they are a little short a couple years. Bloomberg didn't have that information, but Sprint is consistently the lowest with the information that we have here, and Verizon's really, really surprising. Okay, here's a quick ratio we ran between the industry. AT&T has the highest quick ratio. Here, it's really just fluctuating. Once again, it's a battle. There's not any really consistency throughout this. They're all fighting back and forth, so who's going to be higher and lower. It looks here to me, they're like The Verizon is a little lower on the quick ratio, pretty consistently. All right, and here's the profit margin. AT&T once again has the highest, and Verizon's at it again with the lowest there. So that's the profit margins. We've compared them between industries. I really just compared the ones that I thought were like, would be really drastic, and that's the end of my presentation. So thank you so much for looking at it. I really enjoyed doing this project. I learned a lot about 3 different industries. So thank you so much.